What's going on, everyone? My name's Obi and welcome back to the Courtside Financial Podcast, the podcast where we break down what's going on in business and technology. And of course, today we've got an interesting story for you guys, so that I hope you guys enjoy it. But picture this, it's June 26th and Lei Jun takes the stage with that signature demeanor of his, and what he dropped was nothing less than groundbreaking. The Xiaomi YU7 dropped and the numbers were absolutely insane. Again, we're talking about 200,000 orders in 3 minutes, not 30 minutes, not 3 hours, 3 minutes. Now, in my last video, you guys did leave some comments, and I've heard you. Some of you guys said, Obi, these numbers are always inflated. Fair point, but even accounting for the water that's usually in these figures, 289,000 orders within an hour, that's absolutely insane. Let me put this into perspective for you guys. I've been covering tech and business for years. I've never seen launch numbers like this in the automotive space. This isn't just a successful product launch. This is entering market disruption territory, guys. So today we're taking a look at this holistically. We're diving deep into what this means for the global EV landscape, but more specifically for the Chinese EV landscape, because as you guys know, I'm a NIO investor. I'm bullish on NIO, so it's important to me to watch what's going on in the market and keep focus on things. Here's what makes the YU7 launch terrifying for competitors. Lei Jun didn't just throw another EV into the market. He executed what I call surgical market penetration. The YU7 starts at 253,000 yuan, but here's the kicker. The price gap between the standard version and the pro version that'll likely drive most of the sales, 20,000 yuan. Think about that strategically. Xiaomi eliminated the price wiggle room that competitors usually use to differentiate their product. It's like they said, here's our floor price and here's our ceiling. Good luck finding space to compete with us. One industry insider described it as a feeling of powerlessness. Now let's talk about NIO, because this is where things get really interesting. Lei Jun has been really clear about one thing, crystal clear about one thing. The fourth quarter needs to be profitable. Not we hope to be or we're targeting profitability. We must be. Here's his math: 50,000 sales across all 3 NIO brands, gross margin between 17 and 18%, keeping sales and management expenses at around 10%, and R&D at 6 to 7%. Sounds reasonable on paper, but the Xiaomi YU7 made that math significantly harder. It's because the price overlap is real. The YU7 is trying to cut into NIO's pie, going after things in the same segment as their upcoming model, particularly affecting their 5566 strategy for 2025. But here's where it gets interesting from a business perspective. NIO is doubling down on the Envo L90. William Lee's calling it a game changer for the 3-row SUV market. And honestly, based on early previews, it's pretty impressive. The L90's trump card is space efficiency that actually solves some problems that users are having in this segment. We're talking about a 6-seater SUV where all passengers can travel with their luggage comfortably, huge front trunk plus usable rear cargo space. That's addressing actual pain points, not just spec sheet bragging rights. Here's NIO's strategic bet. While everyone's playing the extended range game, they're going pure electric vehicle. The pure electric vehicle route with battery swapping is the differentiator. It's bold, it's risky, but it could pay off if they price it right. Speaking of pricing, and this is crucial, there are some indicators that this new vehicle will be priced around the 300,000 yuan range. But here's my take: they need to be more aggressive. They need to start somewhere around 279,000 like the YU7. Then I think that they need to add battery as a service option at 200,000 yuan. I think that's how you come in and be aggressive and disruptive. XPeng's situation is fascinating from a strategic standpoint. They've been climbing back from their 2023 lows with the Mona MO3 and the P7 Plus, and so XPeng's clearly showing some real momentum in the sub 200,000 yuan segment. But the YU7 launch just threw a wrench in their upmarket aspirations. Here's the brutal reality: Xiaomi's 253,500 Yuan launch just created a pricing ceiling for mid-level SUVs. The message is clear: either significantly differentiate or you gotta sell your cars cheaper. XPeng's upcoming G7, it's caught right in the middle of this crossfire. It's got solid specs, over 2,200 tops of computing power, good passenger space, and decent cargo capacity. Based on their G6 and G9 pricing patterns, expected to land anywhere from 200,000 yuan to 240,000 yuan. But here's the problem: even with solid fundamentals, the G7 is launching into a market where Xiaomi's making all the noise right now. It's like being a great band trying to get noticed while Taylor Swift is having a concert right next door. The silver lining is Xiaomi's order overflow. When you've got 240,000 orders in just 18 hours and deliveries are already spanning over 50 weeks for the standard version, there's definitely some spillover opportunity for competitors who can deliver faster. Li Auto's story is perhaps the most complex here. About a month ago, they quietly lowered their annual sales target from 700,000 to 640,000 vehicles. That should have been our warning sign that challenges were mounting. Their extended range L series is facing pressure with Huawei, their M8 gaining a little bit of market share. So CEO is making a strategic pivot with their i8 and i6 models launching in the second half. Here's what's interesting though: Li Auto's not just jumping into pure electric. They're building massive infrastructure to support it. Over 2,500 self-built supercharging stations represent massive infrastructure investment from the company. But the challenge they face is unique. With them launching these electric vehicles, it's obviously going to cannibalize the extended range vehicles that they've been kind of thriving on. It's going to eat away at one arm of their own business. How do you sell both extended range vehicles and pure electric vehicles essentially in the same class of vehicle? It's a brand messaging nightmare. Plus, if industry pricing logic holds, the i8 and the i6 will be priced at a premium to their extended range counterpart. That potentially puts them at 350,000 to 400,000 yuan for the i8 and 250 to 300 for the i6, right in Xiaomi's crosshair. Li Zheng's recent organizational restructuring represents that they know that a major battle is coming. As one analyst put it directly, extended range faces Huawei and pure electric can't escape Xiaomi for Li Auto. Here's what really keeps me up at night thinking about this industry. Xiaomi officially announced their car manufacturing ambitions in 2021. 4 years later, they're absolutely dominating launch metrics and forcing already established players into defensive positions. The traditional automakers slowly transitioning to EVs, well, they should be absolutely terrified. If Xiaomi can achieve this level of market disruption as the new kid on the block, what does that say about industry veterans who's been at this for decades? It's a harsh reality check. Many of these established players might just be grassroots teams masquerading as sophisticated forces. So where does this leave us? For NIO, XPeng, and Li Auto, this is actually their biggest threat and their biggest opportunity. Xiaomi is a tsunami forcing everyone to level up their game, and they demanded that we pay attention to them. NIO needs the L90 to hit perfectly. Right product, right place, right time. There's almost zero margin for error with this launch. XPeng should be leaning into becoming the Redmi of EVs, or the affordable version of EVs. No shame in that. If it's executed perfectly, it can pan out well for them and the company can do really well. Li Auto needs to solve its brand positioning puzzle. It's playing both sides of the fence, and it actually looks like things have caught up to them. But here's what I find most interesting. This entire shakeup might actually be healthy for the entire industry. When you've got Xiaomi forcing everyone to compete on real value, not just price, it makes everyone level up their game and consumers benefit the most from it. The question isn't whether the competition will be brutal. Lei Jun already answered that. Don't need to get too much into that. You should get that from just watching this video. But the question is, who will emerge stronger from this crucible? And anyways, that's it for this episode of the Courtside Financial Podcast. This is Obi signing off. I'll catch you guys in the next installment. Thank you for tuning in. Goodbye.